In 2025, Donald Trump reintroduced a sweeping tariff policy targeting a broad range of imports. A 10% baseline tariff was applied to nearly all imports, starting in April, with additional levies of 20 to 25% on global steel and aluminum, 25% on auto imports and parts, and special reciprocal tariffs on countries with trade surpluses with the U.S. These reciprocal tariffs reached 34% on China, 20% on the EU, 25% on South Korea, 24% on Japan, and 32% on Taiwan. An executive order added a 25% tariff on all goods from any country importing Venezuelan oil. By August, finalized rates included 35% on Canada, 41% on Syria, 40% on Myanmar and Laos, and 39% on Switzerland. Countries facing the highest rates included China, up to 145%, Cambodia, 49%, Vietnam, 46%, Sri Lanka, 44%, Bangladesh, 37%, and Thailand, 36%. Taiwan, India, and South Korea also saw significant increases. Even U.S. allies like Canada, Japan, and the European Union were not spared. Russia, Belarus, Cuba, and North Korea were largely exempt due to existing sanctions or minimal trade. Several countries managed to negotiate better terms. Malaysia, Cambodia, and Thailand secured reductions. Japan agreed to lower tariffs in exchange for major U.S. investment pledges. The EU, UK, Indonesia, and the Philippines struck deals to maintain moderate tariffs by promising U.S.-friendly trade policies or domestic investments. China was the most severely affected, with tariffs initially reaching 145% before being partially rolled back to around 30% under a temporary deal. Smaller economies such as Cambodia, Vietnam, Sri Lanka, Bangladesh, and Thailand also saw sharp declines in exports due to the steep tariff rates. On the U.S. side, the average effective import duty rose to 18.2%, the highest in nearly a century. This increase is estimated to raise consumer prices by about 1.8%, costing U.S. households roughly $2,400 a year. American businesses faced disruptions in supply chains, cost inflation, and increased production costs. Economists warned of recession risks if the tariffs remain long-term. Trade partners experienced declining export revenues, supply chain disruptions, and inflation. Many retaliated with their own tariffs, including China, Canada, and the EU, further reducing trade volumes. Smaller exporting nations in Asia faced job losses and industrial slowdowns, particularly in textiles, electronics, and agriculture. Globally, these policies triggered market uncertainty, legal disputes at the WTO, and rising geopolitical tensions. Many companies began shifting production away from China to other Southeast Asian countries, accelerating the decoupling of global supply chains. Inflation and trade contraction became global concerns as the world economy adjusted to a more protectionist U.S. stance.